comments.
All right. Okay. All right, everybody. Welcome to the first Simply Bitcoin interview format. So in case you guys are freaking out, the regular show is still staying. We're not changing any of that, but we're going to start adding different types of programming. And I know the macro environment is freaking out a lot of people, so I brought literally the best guests to talk about it. So I'm going to introduce one of them one at a time. Greg, how you doing? Thanks for joining us. Awesome. Jeff, thank you for making it.
Hey, Nico, thanks for having me.
And my pleasure. And of course, James, how you guys doing?
Nico and fellas, what's up?
Man, I'm super excited to have you guys. Look, I've had this weird experience because, like, I've told this to you guys individually. I skipped the traditional finance world. I went straight to Bitcoin. But it's interesting because being in Bitcoin, I've had to learn a little bit about how the old system works. And one of the things that has troubled me the most, and I actually have some charts pulled up, is the sticky situation that the Fed is in. And I don't know if they have the tools to deal with it. Let me pull up some windows so you guys could see what it is I'm talking about. Here we go. All right, give me 1 second. Okay. All right, so the infamous, here you go. Can you guys see my screen?
I can't.
Okay, give me 1 second. Sorry, this is the first
I can see Greg.
There we go. Boom. All right. So the federal funds rate, right? So we all, I think we all know this, right? This is where we are today. Back when the United States had this situation in terms of inflation was, the famous Volcker era, the late 1970s, early 1980s. But as you can see, they had a lot more, wiggle room. And I've honestly been going back and forth on Simply Bitcoin. I don't know how they're going to deal with this, right? Of course, if you talk to Bitcoiners about this, they're like, oh, this is the beginning of hyperinflation. We all remember that tweet by Jack Dorsey, right? Hyperinflation is coming, and then the mainstream media exploding about it, trying to set a counter narrative. So I'm going to pass it on to Greg. Greg, is the Fed really in a tough spot?
Okay, guys, welcome. When you go back to 1982, you have to realize that it was an entirely different world to begin with. Most importantly, Paul Volcker was able to take on inflation because the total debt load of the United States was markedly different. Okay. So yes, the Fed is in a tough spot purely because the debt load is so much larger as a percentage of gross domestic product in today's numbers than it was back in the 1982 era. So the ability for the Fed to raise rates is restricted on the upside by the interest expense that's going to be charged on the outstanding debt. And when the debt rolls over, to the extent that interest expense may surpass the budget for the military this year, that's about $800 billion. The Fed only takes in about $4 trillion of revenues each year. And 2.6 trillion is spent on entitlements. 800 billion or 0.8 trillion is spent on military spending. You can see that the difference, which is 400 billion, if 700 billion or 800 billion of it is interest expense, you see that the debt spiral just grows organically because of the amount of debt. And that's at 3%. Imagine if they tried to fight inflation, which in the Volcker era was 8.5% CPI, he would have raised rates right around 12%. So the math doesn't the Fed is absolutely between a rock and a hard place. I'm uncertain whether they understand the mathematics of it, but really shouldn't be that difficult. If you want to go into a full-fledged debt spiral, raise rates, watch the global economy go into a recession/depression, watch tax revenues decrease because your economy is falling, your tax base and going up. So, I would say it's game over. I don't know any other way of describing it except, as Luke Roman points out, called financial repression. And we can get into that, but very simply, that is where they invoke a measure of yield curve control. They artificially hold rates at a low level while hoping that inflation will float the global tax base higher so that the equation works. And the equation doesn't work unless you have an error term. And the only error term is printing money. So fiat debasement is 100% certain in all outcomes. So I want to point this out. If there's one thing to take away from this, people that are listening, it's not about CPI inflation. Bitcoin does not hedge CPI inflation specifically. It hedges monetary inflation, M2, M1, M0. Don't confuse CPI, which is a lagging indicator, the result of monetary inflation. Just understand that fiat debasement is 100% in all those, and you better own something that stores value in a non-fiat base. So yeah, the Fed is good. They don't need more lawyers. They need more mathematicians. Over to you guys.
Amen. So, Greg, to me, it sounds like you're describing the end of fiat. Is that correct to say that?
Not the end. It's game on. It's more of the same until the world decides that it's game over. And I don't know when that'll happen. And it happens in other countries quicker. Foss has the worst internet connection ever. He was on Bitcoin Magazine live stream and couldn't get a decent. Okay, fuck you guys. All right, look. At the end of the day, I'm doing my best. I have a bad internet connection. I'll go on mute and just leave it to that. They need more mathematicians. I'll go on mute so I don't destroy this live stream.
We'll pass it back to you, Greg, in a bit. So Jeff, and then we'll pass it on to James. Do you agree with Greg? What is the situation of? And again, I just want to emphasize, guys, I don't have the experience than these gentlemen here. I'm looking at it from the Bitcoiner's perspective, and I don't think it just takes common sense to be, how are they going to get out of this? Now, one of the talking points that they've been using, Jeff, and I'll pass it on to you, is that the core inflation, right, has actually been decreasing over the last 3 months. Is that potentially a sign that we've turned the corner?
Well, first of all, thanks for having me on. It's really fun to be here with all you guys. You guys got to know about Foss. So he sold all of his shares to buy Bitcoin when it went sub 30,000. And then when it hit 20,000, he actually sold his broadband internet and went back to dial-up to save some money. And so he could buy more Bitcoin. So don't be too hard on him. And then Nico, man, I love it that you don't have a traditional finance education, because all traditional finance roads lead to Bitcoin. So you're just sort of bypassing it. And we're doing all this big, long arc, circuitous arc, and we're trying to pull people into Bitcoin, but you just went straight there. So you're the smart one among the three of us. How do I feel about so what is inflation doing? I definitely think so inflation blows, right? It's very high. Cost of goods is high. I get passionate about this because what does that mean? It means that quality of life for people who live on the margin. Basically, the most unfortunate among us financially are really suffering right now. Like, it was hard for them to pay for groceries 6 months ago. It's basically impossible for them to pay for groceries and gas right now. They're taking their second job. Some of them are taking their third job. Life sucks right now, and I think it's going to get kind of a little bit worse before it gets better. And then on top of that, we got the Fed destroying demand to get the supply-demand equations back in balance and to hopefully bring prices down. I think they will succeed, by the way. The downside is the cost of that. That means these same people who are really struggling right now are going to get fired from some of their jobs because that's what happens when you destroy demand. So it has there are so many different ways we can go on this, and I'm glad we have some time to talk about all these different things. It's going to get ugly. I think the macro still looks ugly. I think anytime you see the Fed doing a rate hike cycle into a macroeconomic slowdown, that's just a recipe for disaster, basically. Stocks, I still think, have further to fall. Risk assets in general have further to fall. The real estate market, especially the residential real estate market, is definitely already rolling over. I think that's unequivocal at this point. So the Fed is getting what they want. It's very effective for the Fed to bring down high prices, bring down inflation by destroying demand, by causing a recession. This recession will absolutely bring prices down, but it's going to be at great cost. So I think that we are at or near a peak right now. I will be the first to admit I was wrong. I thought we were going to peak in inflation back in the first quarter, and then we may start to see some disinflation, very mild, but some disinflation starting as early as the second quarter. I was wrong. I own that. And I did not expect it to be this sticky, but it is. It's a problem. So, to Greg's point earlier, the Fed is stuck between a rock and a hard place right now because they don't want to be raising rates. They know they're going to break the system. They know the softish landing is just a joke. They are going to put us in a hard recession, possibly worse. And by worse, I mean a depression. And it's going to get ugly. So they're going to achieve their goals, and it's going to be at great personal cost to Americans and basically all people in the Western world. I'll hand it over to James.
So, James, I'm going to ask you. I think I'm going to ask you the question that I asked to Jeff. Their talking point, right? And by the way, I agree with you, Greg, and I agree with you, Jeff. Is that core inflation the last 3 months has actually gone down? Is that just another? Inflation is transitory talking point. Are they manipulating that data? How do you feel about that, James?
Yeah, I mean, first of all, thank you for having me on. It's great to be online with Jeff and Greg, and these guys they are whip smart, man. So listen to what they have to say. They have massive amounts of experience in investing in these markets, and this is not an easy time. So what are they doing? The Fed's making it difficult. Or they've made it difficult. They should have raised rates way back when, back in the end of 2021 or in the middle of 2021. They waited too long and inflation got out of hand. It is out of hand. The problem is, like Jeff was alluding to, the demand is not the issue. It's the supply side. And energy is such a large part of that equation that we're talking about. Does it matter? Core inflation, versus all of CPI, does it really matter? Like Jeff just said, people are hurting. And like Greg is saying, the Fed needs to, they need to clamp down on inflation, but they have to do it in a way that they don't destroy the markets. When you kill the bond market, you put yourself in a situation where your currency is at risk. And so with the debt load that's out there and with inflation where it's at and where the interest rates are at, what can the Fed do? So you're seeing that they're raising rates and it hits the stock market. Why does it do that? Well, the cost of financing goes up for these companies. Companies' margins go down. That puts in margin pressure, and then the multiples of those stocks get compressed. And so the stock market goes eventually, because the United States is so intimately tied to the financial markets. The economy is so intimately tied to the financial markets. It pulls down the economy and overall GDP. So, but also, like Jeff was saying, look, interest rates go up. That raises the long bond and the mortgages that people are paying. And if you're not on a fixed mortgage, well, then your mortgage payments just went up by almost 100% from last year, right? And if you're on a fixed mortgage and you don't have a house, or if you want a fixed mortgage and you don't have a house, well, you can only afford pretty much half of what you could afford just last year because of that rate. The way the interest rates work, the monthly payment will be twice as much for the same house. So houses have to fall by almost 50% or over 50% at this point in order to come back in line for the same monthly payment. So that's demand destruction for housing. So you've got people feel like they have less wealth. They definitely have less wealth because of the stock market going down, 401ks, IRAs. There's a lot of wealth in the United States that's tied to that. And so what can the Fed do? Well, they're going to raise rates, I think, as fast as they can, just as quickly as they can, because they know that they're working in arrears. They know that they're reactionary. They've said it before. They admitted to. Powell said it on camera 2 meetings ago. We're just react to the data, and the data is imperfect. And so what they're looking at is old. They know that, and they're using that to give them runway to raise these rates as quickly as they can before the market absolutely falls apart. What do? They signal it. You hear every single Fed governor out there talking and chirping every single day, and it's all signaling to let the market know what they're going to do, because what the market hates is uncertainty. So, and that's really important. And both the bond and the stock markets really hate uncertainty. And they can talk it up, they can move rates as quickly as they can. That will give them the runway to decrease rates again quickly if they need to. Now, I think that what they're going to do is they're going to raise rates another 1 or 2 times, and then they're going to pause. They're going to step back before the election in November. They're going to stop, say, we've got it under control, everything's good, the market's great, everything's in order, the United States is in good shape, so elect our representatives that we were either appointed or reappointed by. So and then if you look out at the euro dollars, it's suggesting that our last raise is in December at the absolute latest. So actually, I haven't looked at it today, but that's what it looked like yesterday and the day before. So, it sounds like the rates are going to roll over again next year, and we're going to have to go into quantitative easing. So
look, all you guys are telling me, and the central theme that keeps coming into my head is, it sounds like the U.S. is a centrally planned economy. Perhaps I didn't say it the way, perfectly, but the fact that an institution can crash prices, and not to mention pump prices, right, when they're just injecting all that liquidity, I know, again, I didn't come from it from the financial world. I came from it from the Bitcoin world. And from my perspective, that's what it looks like. So Greg is very passionate. I'm going to pass it on to Greg first, and then we'll make another round.
There is no question that the central bank is centrally planned. That being said, we need to understand that it is run by committee. And by and large, running anything by committee is a difficult task, okay? I am not a fan of central planning. I'm certainly not a fan of having a lawyer in a central planning chair. And I want to sort of push back a little bit on what James said, and I think the narrative in the market right now. I think the Fed is going to raise one more time and is going to pause, because I think there's too much pressure in the credit markets for them to continue to raise. And people falsely look at the euro dollar market and assume that it's anything than a betting window, because it's a short-term betting window where the odds change like at a horse track. You have to look at the longer-term trends in things like credit, yield markets, credit spreads on banks, for example. If you notice the CDS on Credit Suisse First Boston, the credit default swap spreads on CDS First Boston, Deutsche Bank, are basically predicting worse credit conditions than COVID. In fact, the worst deterioration in credit conditions since the great financial crisis. Drive the bound car into a wall if you want, and bring the global economy into a depression. Raise one more time there's the old adage on Wall Street, 3 hikes and a stumble. Well, this is going to be the third hike. And the market is basically, whether it's a rally because short covering, or it's a rally because they are called the Fed's bluff. This is a most important decision, the whole concept of the Fed narrative. 75 basis points or 100 basis points, that doesn't matter. What matters is for guidance. Because right now, the credit markets are in trouble. I'm going to sign off here. I've had enough of this Greg News new software and all that shit. Do well on this on Restream. It doesn't work with my computer that well, so I'll leave it to the other two guys. You're in very good hands with these other two gentlemen. I'll just say, finally, look at credit. Equity guys are the idiots in the room 9 times out of 10. Equity guys are the idiots in the room. Look, this thing isn't over in credit markets. Signal all clear. So thanks for having me. Sorry about my internet connection. I'll do better next time.
Greg, thanks so much for joining us. Take care.
Really bummed you're leaving, Greg. Hope you stay.
Oh, man.
All right, gentlemen. So, got more questions for you guys. This is a very interesting question. Is a deflationary world possible? I'll pass it on to James, and then we'll go with Jeff.
Is it? If you talk to Jeff Booth, it's not just possible; it's probable. And I didn't really understand it before I talked to him, and that concept of a deflationary world. I mean, like, if you look around us, we should be in a deflationary world, right? Everything that all of our energy in manufacturing, in creation, is being enhanced by software and hardware and technology, and we should be benefiting from the fact that each increment of work that we put out gives us more output from that work, and we're not. And it's a simple reason. It's because of manipulation of money. If we didn't have manipulation of money and all the debt that's created on top of it, then we wouldn't be in this position of everything inflating around us. It's not natural. Inflation's actually not natural. I mean, think about farming a field with your hands versus farming it with a till where you have an ox. That's a completely different input to get a different output. And now take that and put it with Intel chips and with airplanes, and we can do more with our little phones, and we could have in years. I mean, this has more technology in it than sending somebody to the moon back in 1969, right? So think about that. We should be benefiting from all of that power that's in our hands. So, but we're not. It's not. So in my mind, it's not just possible. If you have the right currency, if you have the right money, then it's probable. And I'll hand it over to Jeff, because I know that he can riff on that, but that's the point. That's the point of Bitcoin right there.
Jeff, before you hit that, right, I'm going to add some spice on top, right? So I think it would benefit the people, but who has the most to lose in a deflationary world? Definitely governments, right? So are they going to allow this to happen? Or maybe do you agree with the theory from the sovereign individual where they don't have a choice? It's just the internet is going to enable the individual to have so much freedom because of essentially he's able to not only take his wealth with him, he could take his physical self with him. And I think that before Bitcoin, that was absolutely impossible. So What is your perspective on that? How do you think governments are going to respond to, and are they going to allow a deflationary world? Because I think that's the question that I hear the most as a Bitcoiner. After you tell them and someone believes like, okay, this is a great system, but governments are going to ban it. So I'm going to pass that on to you, Jeff. What do you think?
Yeah, well, I just agree with where you are adding the little sprinkle of spice on top, and that's what I was going to say, is that government can't stop this, right? This was literally built as a workaround, and the internet is unstoppable, and Bitcoin is unstoppable, and so you don't just stop it. Even if you're a very powerful government, even if you have, super nefarious plans and you have the world's most powerful military, you don't simply stop Bitcoin and you don't stop the internet. So this is a complete workaround. And I think, to James' point, talking about Jeff Booth and the whole deflationary pressures of technology, we're not seeing the benefits of those right now because we live in this system, this fiat system that is literally built on the bedrock of the fiat system is inflation, is monetary debasement. And so they're just colliding and clashing with each other all the time. So I think who is the biggest loser? It's super easy. It's the fiat system, and it's the proponents of the fiat system and the creators of the fiat system. They're going to hate it. It's going to be like a world war for them. Like their whole lives are going to be turned upside down. Traditional banking systems are going to be turned upside down. The whole Wall Street, the whole world of finance, the whole credit-based system is going to be literally flipped on its head. They're not going to want it to happen. So there's either going to be the smart people who figure it out and get on board, like me and James and Foss. I'm sorry he left, by the way. But those of us who are in traditional finance and said, you know what, there's actually something to this Bitcoin, and I think that it's going to win in the end. So maybe we should jump onto this bandwagon. There's going to be people who fight it to the end, and I've been saying this for a while. Like the people who are most benefiting from the traditional fiat system, the Warren Buffetts and Charlie Mungers and everybody in their ilk, the investment bankers, the Goldman Sachs people for the most part, they're not going to like it. The government officials, obviously, statists, people who just believe in the United States and the command control center of the world, and that we need this dollar hegemony to continue and persist indefinitely, even though it won't. It's obviously weakening already. So there are a few factions that are going to hold out and who are going to make life difficult for Bitcoiners. But Bitcoin is just inevitable. It just is. And so I came to that conclusion about 3 years ago, and I that was when I first relaxed. Like I quit caring about, is the government going to shut it down? What's going to happen? How terrible is it going to be? I don't really know, and I don't really care. All I know is it's inevitable, and we're going to get there eventually. And so I just think you might as well join the winning team while you can and while it's cheap, and then you'll benefit and you'll just enjoy the ride on the way up.
Absolutely. I've actually tweeted that out before. I said, what worries me is not Bitcoin winning. What worries me is the transition. And I think that's really what keeps me up at night. Anyways, I'm going to spice it up a little bit, pass it to James. So this just came out. Tesla earnings meet Q2 expectations. They sold 75% of their Bitcoin. James, did Elon bail on the honey badger? What's going on there?
I know. I just saw that. I mean, are you surprised? I mean, truly. I mean, he's been kind of negative Bitcoin since what? February, March of 2021. So it doesn't surprise me at all. I don't know. Maybe Tesla needed money. They needed to manipulate. They needed to massage their balance sheet for their earnings. I have no idea. I don't know how their balance sheet is structured because I haven't ever invested in Tesla, and I haven't looked at it. But it doesn't surprise me one bit, and it doesn't freak me out either. I mean, it's what it is.
So, Jeff, did Elon abandon us?
Well, it's funny that we're talking about this now, because this is exactly what those of us who spent a lot of time talking about this way back last year, a year and a half ago, were talking about, and what would happen. And what I was saying, when he first came on board, right, and we saw that big Elon pump in Bitcoin back in early 2021, people were excited. I lost my enthusiasm for it as soon as I heard him talking about it. And then the more he talked about it, the less enthused I got about him. And I'm like, this guy does not understand what he's holding right now. He's one of those guys, he's literally bringing back all the arguments of the block size wars back in the 2017, 2018 time period. He's trying to fix Bitcoin. He's talking about how, man, what about Doge? What about, what about these other dog coins that they function so well? They're just great medium of exchanges. He just didn't understand what he was holding. And so what I was telling people back then, I said, be careful what you wish for, because Elon does not understand Bitcoin. And the moment we hit a tough patch, the moment we hit a hard recession where the choice is between saving Tesla, making Tesla look good, or selling his Bitcoin, he's going to sell his Bitcoin in a heartbeat. And so that's where we are today. I'm not surprised. I tweeted out that, he made me 75% happy by selling 75% of Tesla's Bitcoin. Make me 100% happy, Elon. Just pull the plug, get rid of your Bitcoin, give it to us, and then you can buy back later when it's back above 100K or whatever it is. So he'll come around eventually. But one point I want to bring up is that Bitcoin wasn't necessarily made, at least at this point, for people like Elon. It's not meant for the very wealthiest in the world to speculate and play with, like that little playground thing to earn another $1 billion. This is meant for the plebs, right? This is meant to bring social justice, to preserve purchasing power over time and space for people all over the world who need it. So, people in countries like Turkey and Argentina and, throughout Africa, Central South America, people who are suffering because their governments are just a bunch of D-bags making stupid decisions, debasing their currency on the backs of their citizens. That's what Bitcoin is made for. And so this preservation of purchasing power is the reason, one of the main reasons why we love Bitcoin, and why people like Elon he may not ever understand it, honestly. When you're so wealthy and you don't even need to possibly be concerned about loss of purchasing power, you just don't really care about stuff like this. But when your life depends on it, you care very much about it. So I kind of say good riddance. We'll see him in a few years. I'm sure he'll come back in, and we'll welcome him. We'll give him a big hug when he comes back.
Oh man, yeah. I think it's funny because the price of tuition spares no one, and just because and this is what I love about Bitcoin, right? It doesn't matter whether you're a billionaire or nation state. You got to earn your stripes, something that Michael Saylor is experiencing right now. So Michael Saylor's stock took a huge hit because of that. And then if you look at the I don't call them mainstream media anymore because they're not. The corporate media narrative is like, this guy's in trouble. Again, I don't know enough about public companies, which is I'm going to ask James. Is he in danger of, let's say Bitcoin keeps going down, right? Is he in danger because it's a public company of losing control of his company?
I mean, only if he gets a margin call, up until the point, he's still well within his fiduciary duty. I mean, he's made it extremely clear what he's doing. He's not hiding anything. If you buy any of those shares, then you know what you own. It's not like he's just adding to the treasury. He's adding Bitcoin to the treasury without telling anybody. So, and he's financing these purchases. He's got convertible debt that's financed with fiat for Bitcoin. So no, I don't think he's in danger. I think the only time that he would be in danger is if MicroStrategy has to start selling Bitcoin in order to meet margin calls, and then only if it becomes a problem and they can't meet a margin call, then that's when the board would have to do something. But up until that point, there's no reason for them to act against him. And in fact, if they did, it would be so tumultuous for the company that it would be a poor decision for the board to oust him. So no, I mean, one thing that could happen, which I don't see happening, but it could, is you could have an activist buy up a massive block of shares and then force a special vote in order to bring up the conversation. But again, I don't see that happening right now. And I don't think he's in trouble. I think that he's positioned himself to have another huge drop in Bitcoin. It's got to go down over 60%, I think, before the conversation even begins again. So Yeah, I think that's, as a public company, the problem comes when you're not being forthright, when you're hiding things, when you have things off balance sheet, when you have special vehicles, you have special, you have assets that are not shown clearly on your balance sheet or disclosed clearly in public filings. But he's disclosed everything. He's been extraordinarily upfront about it. And if you're surprised at what you own, then that's your fault. It's certainly not his due to lack of communication.
Gotcha. Okay, that's really good to know. So you said activist in there, and then that, that spurred a question in my head, which I'm going to pass on to Jeff, right? What I've seen, and of course I have to do this for the regular show, Simply Bitcoin. So what I've seen over the last year is this, I would even call it insincere. I think it's on purpose at this point, but this combined attack on Bitcoin's proof of work, right? We saw an attempted ban in Europe. You saw an attempted ban in Norway. You have a ban that looks like it's going to go through in New York State, right? So there's a global effort. Also, the Senate held a meeting called Cleaning Up Cryptocurrency, not a meeting, a committee, better said. What's going on there, Jeff? So, the Bitcoiner in me, it's, I'm paranoid. I'm like, oh, we're under attack. The reason I believe it's malicious, right, is in the example of Norway, 100% of the renewable energy, 100% of Bitcoin miners in Norway are powered by renewable energies. But certain political parties in Norway still tried to ban Bitcoin mining. So what is going on there? We know by the report that was released today, for example, or it was yesterday, that that 60% of Bitcoin mining is according to that report is powered by renewable energy. So my belief is that it's a malicious attack. They know exactly what they're doing, but they're hoping that they accumulate the political willpower by uninformed people to do something politically, right? You have very popular senators in the United States like Elizabeth Warren just attack after attack after attack, right? So Jeff, what are your thoughts on there? Do you believe it's malicious? Do you believe it comes from a good place? What are your thoughts?
I think it's a little bit more complex. So I think it involves all of those things. So I think the people who understand Bitcoin, you can either, if you understand Bitcoin, and it's a select minority of people who actually do understand it, you either like it or you don't like it, right? And so it comes down to, if you don't like Bitcoin and you don't think there's a role for it, say you're a statist, you want the US dollar to reign supreme forever, say you're scared of the way it's going to upend the traditional, fiat system, those kind of things, you don't like it, you therefore think it's a waste of energy. And so any energy consumption, even if it's, 1 joule of energy or whatever, sorry, I don't know what terms are well, it uses 1 kilowatt hour of energy or so, anything like that, it's a waste of energy, right? And so it's kind of like, if you hate Christmas, then Christmas lights are a total waste of energy. And why do people put Christmas lights out? I mean, can you believe it? I mean, it's insane. Why do you use refrigerators? You could just salt your meat and be fine. Like, this is crazy. So this is kind of how people think. And once an issue becomes political, it's no longer really evidence-based. It's no longer really even possible to talk about rationally. These people clearly have an agenda, right? Elizabeth Wormtongue clearly has an agenda against Bitcoin. She's a statist to her core. She's going to defend the traditional system to her core, to her death, probably. And that's fine. That's just that's the phase we're in right now. First they ignore you, then they mock you, they laugh at you, then they fight you, and then you win. We're in the and then they fight you stage where we're transitioning from they laugh at you part. So I don't really get bent out of shape by this. Honestly, I just get mostly tired by it because it's such a tedious argument. I mean, it doesn't waste energy, right? It uses wasted energy. It's such a better user of energy than almost any other thing that uses energy. It's so much more renewable. It's transformational. So it just comes down to, do you like Bitcoin or not? yes or no, and based on that, you're going to say it wastes energy or doesn't waste energy. We know those, and I'll stop so we can get James in here. We know as Bitcoiners that we want it to use more energy because that's how proof of work protects itself. That's how you have a decentralized, secure network, is proof of work. I would say, by the way, that all other cryptocurrency things that mimic Bitcoin, that want to be like Bitcoin, you guys have lost. Okay, like Shiba, Doge, Litecoin, BSV, pick your thing that's like Bitcoin, that's still proof of work. You don't need to be proof of work. There only needs to be one proof of work money in the world, and Bitcoin has won that. So just accept your fate, accept what's happening, and get behind Bitcoin. That's what I would say. There doesn't need to be any other proof of work system. So I think Ethereum, love it or hate it, whatever, it's making the right decision to move to proof of stake. It's moving over to the fiat system. That's the way to be. We don't need Ethereum to be proof of work. We only need one. So I'll stop there and let James jump in.
So James, same question. Is this malicious? Does it come from a good heart? What's your opinion on it?
Oh no, of course it doesn't come from a good heart. I mean, the system is the system, and the people who are in control of the system are the ones who are most rewarded by it. So if you want to look at if you're trying to figure out why somebody's doing something, look at the rewards and what they're rewarded for. And so that gets you their motivation. And so of course they're going to fight this. They've made so much money from it. They have benefited so incredibly from it. I mean, look, Nancy Pelosi couldn't trade on inside information on Bitcoin. She can't just go and buy a tech stock and then push for legislation that benefits that tech stock in Bitcoin. It just doesn't work. You can't be the closest to the spigot when money is created. If you're a CEO of a major bank, if you're the CEO of Bank of America or JP Morgan, I mean, you're benefiting greatly from the backstop and the input from the Treasury and the Fed. You don't have to worry about failing, really. You can take almost as much risk. You can take as much risk as they allow you to take legally, and you won't fail. They've already demonstrated it a number of times. 1998, 2008, 2020. Nothing's going to fail. Not those big banks. Not until it all fails. So, and they know that, and they're going to ride this as far as they can, as long as they can. It's just a simple equation. It's what are the motivations for the system? Change the system, change the world. So we got to change the system, and that's why we're here. That's why all of us are here, is to help change the system. I was in that system for a very long time, and I watched people benefit from it. And some of them weren't the smartest in the world, but they were in the right place at the right time, at the right connections, and came from the right family or whatever, and got massive amounts of money and benefit from it. And they have no clue about what's really going on in Bitcoin because they don't have to. They've got so much liquidity, like Jeff said with Elon. He's got so much wealth. What does he care? Like the destruction that would have to occur from his accounts for him to not be a billionaire is just, it's beyond massive. So these guys they cannot even come close to being able to understand what people who are not in their position are going through every day. I mean, people with 2 jobs, families who are sporting 4, 5, 6 jobs, and paying for childcare, paying for health care, and their mortgage just went up, their rent just went up. I mean, they can't possibly understand the problem of the fiat system, and they don't need to. They don't care, and so it's part ignorance and part protection of the system that has benefited them greatly and will continue to benefit them greatly for as long as that is the system that is in place, period.
It really sounds like to me that what you're describing is proof of stake. That's what it sounded like. I think proof of stake in the old system, very, very similar in some things. Okay, so I want to cover something that actually happened recently, right? And that was, I think the last time this happened was in 2000, and it was that the euro and the dollar reached parity. Is that healthy for the U.S. economy, Jeff?
There's nothing healthy about the U.S. economy right now. So I mean, the dollar is a wrecking ball, right? So when things go to pot, everybody screams for the dollar. Everybody clamors. They sell their stuff. They want the dollar. So the dollar goes up. The dollar strengthens against all other currencies, all other fiat currencies in general. And we call it a wrecking ball. It's sort of the cause and the effect. A high dollar has lots of negative effects. But also, what is happening is it's just simply when people get scared, they hit the sell button. They have stocks, they have commodities, they have real estate, they have whatever they have. They sell because they're panicking, like Jim Cramer would tell them to, and then they're buying the dollar. So that strengthens the dollar. There's basically a shortage of dollars, is a shortage of dollar liquidity throughout the world. And that's never a good thing. Basically, when that happens, that's when we have these kind of financial crises that throw the world into chaos. The last one was kind of the great financial crisis back in 07, 08, 09. Those kind of things. We never really can get out of this cyclical system that we're in because of this dollar-based system that we're in. But I'm really veering. Is it good that there's parity? Does it mean anything that there's parity with the euro? Basically, what we're seeing, right, is the U.S. is tightening, the dollar is strengthening. We're taking our medicine first. The European Union, they have a special problem over there where they can't tighten like we can tighten as aggressively here. It's because they're going to leave other countries behind who are really struggling right now. So the main one that comes to mind is Italy. Italy and Greece are two countries to look out for. If they raise rates, they're basically going to just destroy Italy, what's left of them, and Greece. And so they're kind of stuck right now. It's going to be very difficult for them to raise rates without causing just major calamity. I've been telling people that this is the reason why I'm so bearish, and I get a lot of crap for it. And that's okay. But the reason why I'm so bearish right now is we've been sort of kicking the can down the road from crisis to crisis to crisis. And now we're at the crisis where I think we're going to see sovereign nations, developed countries, actually start to default. I think we're seeing huge stresses right now in Japan. We're seeing it happen in specific European countries as well. And if any one of these things cracks and falls hard, like we saw in the crypto world when Terra Luna collapsed, and none of us care about that because we're Bitcoiners, but even though it did, right, it caused this contagion throughout the entire system and it even sucked down Bitcoin with it. If one of those countries fails and it's a major economy, that's going to be a massive contagion effect. And that's really serious. Like that's when you start wondering if the entire system is going to collapse. So that's what I'm concerned about. We might get through it without that happening, but we might not. And so that's why I tend to lean pretty bearish right now.
That's really, really interesting. James, I'm really curious. Do you agree with Jeff with that hypothesis, that theory?
Yeah, I mean, first of all, it's not great for the United States. We're a net importer, so we need the U.S. dollar to be a little bit weaker against other currencies for our importing. The foreign countries' exports to work, right? So the problem is that another issue, and Jeff is right, there's a flight to safety here of the U.S. dollar. There's absolutely no doubt about it. And if you look at Japan, and you look at what they're doing, and they're artificially holding their interest rates low by, they're executing what's called yield curve control by buying their 10-year treasury and keeping it at 0.25%. They've said that they will buy as many as they need to buy in order to keep it there. The Bank of Japan already owns over 50% of all JGBs that are out there, which is just mind-boggling. No central bank has done that before. And so, but the problem is, as investors sell those JGBs, those 10 years and other treasuries, other yields they're selling those and they're getting yen, which they don't want to hold on to. And they're selling those yen and buying US dollars with them. And they're doing that in order to most likely buy US treasuries, because when they get out of the JGBs, they want to have something that has yield. And the 10-year treasury in the US is yielding around 3%. So rather than yielding 0.25%, they can yield 3% if they just move their dollars, their yen into dollars, basically. Okay, so that makes the dollar stronger. Well, the same thing's going on in Europe. And like Jeff said, they're in a really tough spot. if the ECB raises rates, and we already saw what happened when that inflation rate came out, the last inflation print from Europe, from the Eurozone came out at 8.6%. Well, people kind of panicked knowing that, well, the ECB's got to raise rates. They cannot sit there at negative rates. The ECB has been sitting on negative rates for 11 years, and they still haven't raised rates, and had record inflation, and they still haven't raised rates. They're supposed to raise them, I think, tomorrow, maybe 25 basis points. And, but the problem is, like Jeff said, if they raise them and it impacts Italy and Greece and Spain and Portugal negatively, well, those countries are going to then require a new tool that the ECB has come up with, a fragmentation tool, where they yield curve control, same thing that they're doing out in Japan. They're going to buy treasuries in Italy and Greece, and they're the first go to maintain those rates in order to make sure that you don't have Italian banks, and then the Italian sovereigns then basically Italy will default, and so they can't have that. So the issue is the ECB can't raise rates to match the United States. So again, you're selling your euros because you're selling European bonds to get better yield in the United States, and you have a flight to safety in the United States. And like Jeff said, there's so many instruments around the world that are based in US dollars. And I actually just talked about this in my newsletter this past weekend, and it's called the Dollar Milkshake, and it was presented by this guy Brent Johnson of Santiago Capital, and it's basically a riff on the hypothesis that it comes from the action of extracting oil from a neighboring property by drilling a really long straw. So you go underground, drill a long straw, and then suck the oil, slurp the oil out of your neighbor's land. Well, it's the same thing with the United States. We'll just say that you have a milkshake, okay, Nico? And Jeff is over there, and he's on the entire other side of the diner. You're sitting at one table on one side of the diner, and Jeff's at another table at the other side of the diner. And, in this case, the milkshake is, your milkshake is the foreign currency. Now, Jeff drills a straw, or picks up a straw that is really long and drops it into your milkshake and starts drinking your milkshake from all the way across the room. Well, that straw is the US dollar denominated liabilities, the US dollar denominated debt, euro dollars, and then central bank and major global bank liquidity. It's the government bond interest rate differences that we just talked about. And it just sucks all that liquidity into Jeff's milkshake, which is the US dollar. And so that's literally what's happening right now. And it's happening in real time. We're seeing it. And, like Jeff said, that we could see a major sovereign default because of this. The fact that the US dollar is just sucking liquidity out of other markets, and it is becoming a clear problem. And I don't know, I'm happy to own US dollars and be denominated in US dollars right now, but in the end, there's no other way out, and the US dollar may be the last one standing. But what's it going to be worth? How much are we going to inflate until that happens? So that's why I own Bitcoin, for the inevitability that one day it all collapses. And I don't know if that's going to be in my lifetime or, before Jeff's kids are teenagers. But, it's a problem across the world.
I love that description about, sucking the straw and all that stuff. And I can't believe that the U.S. has that much power, where they print all this money irresponsibly, and then everyone else, because they need the dollar, just foots the bill, which I think is what you were describing, James. And it's just absolute insanity to me. I think there's a major. What's that sound? Is that you, Opti? Oh, sorry, that's James.
I've got you've got those blowers, right? They're so loud. Right? And I'm in a vacation house, so yeah.
No problem. No, I have Opti producing.
I'll mute.
No worries. Okay, so I got a question from a fan. I'm gonna pass it on to you, Jeff. Right? And I asked this question Nick Bhatia a while ago. right? But Opti's like, don't blame me. That's funny. I'm always going to blame you, bro. So, Jeff, does Bitcoin make bonds obsolete on a long enough time scale? Because I asked the question, does Bitcoin make bonds obsolete? And Nick Bhakti was like, not anytime soon. So I added a little bit. So on a long enough time scale, does Bitcoin make bonds obsolete?
On a long enough time scale, it makes them obsolete's a really powerful word, right? Never say never. So I don't like to talk in absolutes. I think it makes that system much less relevant for sure. I think the whole concept of borrowing and credit-based system is kind of another fiat construct. It's not only fiat, but it's incredibly potent and necessary in a fiat system. In a Bitcoin system, I think we get just a completely different way of thinking about things. I think we get sort of an equity-based way of thinking about things instead of a borrowing way of thinking about things, just because of how Bitcoin is created. And so assuming we're talking long time down the road, so we're talking decades and decades from now, I assume that's the time frame we're working with. By then, I expect to be on a Bitcoin standard. I expect Bitcoin to be the world's reserve currency and world's reserve asset, both of those things by that point. There still maybe the US dollar will still be around, maybe something else will still be around, I don't know. They're not really necessary though. We don't need other medium of exchanges once layer 2 and layer 3 get built out on Bitcoin. So that's my take on it. When it does, it will be very different, because when you have a currency that appreciates by nature, when it's perfectly scarce, and it's disinflationary, soon to be in 2140 non-inflationary, so not deflationary per se, but non-inflationary, that changes how all of the mathematics work and how you think about things. Like, you wouldn't really want to borrow against it and have to pay the same amount of Bitcoin for 30 years like we do today with cash. Right now, you want to do that. You want to take long dated mortgages and other type of loans out from banks, because your fiat currency is losing value. It's depreciating over time. So it actually benefits you mathematically to do that. You want to take loans out if you can't afford it and if you have the cash flow to pay it, because it gets easier and easier to pay off that, because the money is getting of less value over time. Bitcoin does the exact opposite. If you had to pay somebody, 1 Bitcoin per year for the next 30 years, you would get wrecked and you would get ruined, and there'd be no way you could do that. So it's just going to completely rejigger the whole way we think about these kind of things and think about borrowing. How do you pay back Bitcoin loans? It's just a whole different scenario. So that's a really long answer to say, I think borrowing the way we currently think about it will be very different, and it will be much less prominent in the future on a Bitcoin standard.
Bullish. That sounds awesome. That sounds like a really nice future. James, same question, and then we're gonna get to the very spicy questions at the end that everyone, I think, is looking forward to. So, James, does Bitcoin make bonds obsolete on a long enough time scale?
Yeah, I think Jeff laid it out pretty nicely on the way that inflation works, and that it helps you pay off debt. I mean, I had this conversation with somebody just the other day. I went to Wells Fargo to send a wire, right? I mean, God, you have to fill out paperwork, and it takes hours. I mean, it's ludicrous, right? But old world system. And I'm sitting there talking to this young banker, and he's asking me about the economy, and he knows I'm an investor, and he said, yeah, I'm going to pay off my mortgage. I was like, wait, is it variable interest rate? Like, what's going? He's like, no, I have a fixed rate at like 3.8% or something. I was like, why are you paying that off? And he said, well, because I've got cash. I want to pay it off. Then I'll have more cash. I'm like, no, did you just see the inflation rate? Like, it's getting easier for you to pay that off. As long as you get raises down the road, it's going to be easier if you. And so just trying to explain that to people, again, where they're not, we're not incentivized at our system to make people really smart about personal investing and their own money. It's just not, we're not incentivized to do that, which is just, it's a shame and nearly criminal. But one thing I would add to what Jeff was saying is that what Bitcoin does is it eliminates counterparty risk. Exactly, you don't need to know who your counterparty is, because your dollar is not a US dollar anymore. It's not paper. It's actually a something that you can put in escrow and you know exactly where it is, you have all of that data again, against which you don't even have to see. It's there and you know it. So it can be verified without trust. And that's the point that, that's the biggest leap that we have, that's so critical about Bitcoin, is that you don't have to trust the banker as long as you know that it is in escrow, that you can both see with multi-sig or whatever, however it's going to be set up. So you don't have this 10 layers of debt on top of it. I mean, we can see what happens when, even if you're using Bitcoin as your collateral, if you don't know where that collateral is and how many times it's been collateralized, well, we've seen what happens with that. And so you can keep trying to squeeze Bitcoin into a fiat standard, but you suffer the same consequences. But Bitcoin allows us to avoid that in the future, and that's the biggest leap, and that's what I'm most excited about.
Oh yeah. Okay. Speaking about exciting, James, when you came on Simply Bitcoin a while ago, I asked you this question, and it fascinated me. So I'm going to pass it on to Jeff, and then James, you could add to it if you'd like. What is the end goal here? Hal Finney had this very famous post many, many years ago in the early days of Bitcoin, and he broke it down. Nick Bhatia no, it wasn't Nick Bhatia. It was the author of The Bullish Case for Bitcoin, and his name is slipping my mind, and I apologize.
Vijay Boyapati.
Vijay Boyapati. He mentioned it in the end of his book as well. What is your ultimate bullish case on Bitcoin in terms of price? Why do you think we will get there? How do we capture that? And how long will it take? Jeff?
You're going to think I'm joking when I say this, or that I'm just really stupid, but there is no end game for the price of Bitcoin, because I think it mathematically approaches infinity over time. So it sounds crazy to say that, but that's because of its properties, right? So if you have something perfectly scarce, and if you have forever increasing, human GDP over time and productivity, that will get transferred into Bitcoin, into the value of Bitcoin. So over time, it just sort of increases indefinitely, to the point where it doesn't really matter anymore. And that sounds funny to say also. So it's also, we're living in such a tumultuous decade. Getting back to James and the dollar milkshake theory, we're going to see literally sovereign debt collapse, nations in huge peril, fiat currencies collapse, and that purchasing power has to go somewhere. So that value is going to go somewhere. I've been saying that, I think, in the shorter time frame, so in the next 10 years, I think we see the purchasing power from these weaker currencies go into the big three. So I think they go into the US dollar still. I think they go into the Chinese yuan if they're of the Chinese Russia ilk, or they go into Bitcoin. And obviously the smart one is, I think, to go into Bitcoin. And then I think eventually Bitcoin engulfs China and the US dollar as well. And that's just what happens. And when that's going on, it's hard to understand this now, but it's going to be so volatile and so crazy for these fiat currencies. They're going to be doing this with volatility, and kind of like Weimar Germany, right? And suddenly, what you used to be able to buy, one Bitcoin for 20,000 US dollars, it's going to be $1 million, and then it's going to be $5 million. And by that point, the US dollar won't be worth much, and it's just going to be a completely different kind of era at that point. And that's when it all just sort of envelops into Bitcoin and just becomes this entity that takes over the financial system of the world. So it's a really lame answer. I'm sorry, but that's what I think. And so I don't know how long it's going to take. I will say that based on how concerned I am for what's going on around the world, that we may see a bit of this happen sooner than later. So we've been really disappointed since the last year and a half or so. Bitcoin went from 10 to 60, and then it's just been this just super painful ride back down to 20 or so. I think we're going to see some excitement to the upside here in the next couple of years that's going to kind of surprise people. I also think there's a chance that Bitcoin decouples finally from tech stocks from the NASDAQ, because I think most of the downside is built in. I think most of the people who are holding Bitcoin currently are the OGs, the believers, the dollar cost averagers, the people who are never going to sell, right? I mean, I'm not going to sell if Bitcoin dips to $1,000 tonight or $100. I'm just going to keep buying, and I'm not going to really care, because I know where it's going, and I'm so convinced of that that I just buy it at any price, basically.
Go ahead. Sorry.
Go ahead.
Back to you, Jeff. Does the dollar need to fail for Bitcoin to reach $1 million? Because I heard you.
No. I think the dollar is going to be the last to fall, to be very clear, and I think we're still a long ways away from that, like years, decades, possibly away from that for sure. I think we're going to see the failure of lots of weaker, smaller fiat currencies well before that. So no, but I do think that the dollar is depreciated significantly. So it's hard to say, like, does that mean in today's dollars it's going to be worth $1 million? That will take much longer. I think when the next round of quantitative easing comes around and we see some more debasement, and the next, we're going to bottom at some point, right? It's going to get really ugly here for the next months or quarters. Some point we bottom, and then at some point things get good again. The business cycle turns. We get flooded with liquidity again. Fiat currencies debase. Lots of that's going to go into Bitcoin. So it's going to be hard to say how much a dollar is worth at that point. But it's going to be an exciting decade.
Awesome. Well, I'm definitely excited for the ride. It definitely feels very exciting. James, same question.
Yeah, no, I mean, I don't think it's a stupid answer or a lame answer, Jeff. It's way out there, in time. You're demonstrating how low your time preference is, and that's good. So
thank you.
I do think that the first thing that happens, well, obviously, Bitcoin is it shares two different camps right now. It shares the enthusiasts and the maximalists, people who really truly do understand it. And I don't say enthusiasts lightly. I mean the people who really get it, okay? And then the investors who are playing around in it. And the investors who don't understand it and they're using it as an investment, as something, it's like a new technology, and it's got a huge amount of beta in it. And so when the market rips, Bitcoin rips, and when the market falls, Bitcoin falls. And so they're using it to trade around. At some point, and I think Jeff is correct. Of course, I think Jeff is correct. He's got so many brilliant things to say. But I agree with Jeff that we do decouple, and once we decouple from the technology sector, that's a big leap. And so that's your first real major milestone in my mind to get past a certain market share and a market cap of Bitcoin, and maybe that jumps it up to $250,000 or $500,000 per Bitcoin, and that's like the first big leap. What's going to drive that? Well, it could be a lot of different things. I mean, it could be a combination of any of the above thing. The expansion of M2 supply again, because of what Jeff was saying about the cycle and the Fed cycle and Fed manipulation and central bank manipulation. It could be introduction of ETF that is actually cash based and it's not manipulated by futures, just cash that's actually Bitcoin based. Sorry, a cash ETF, versus something like the futures ETF, which is just paper. It could be a number of large investors that announce that they're buying it for their own portfolios, and they're allowing it to be entered into their portfolios. We've heard it from Fidelity. We know that BlackRock has been sniffing around, but once you get State Street and you get, there's five investment firms that control $30 trillion of assets, right? It's BlackRock, Vanguard, Fidelity, State Street, and Morgan Stanley. But when you get one of those that comes out in earnest and says that there could be another thing that adds to it, you also have, a nation state could come out of things that we're seeing that we've talked about with the dollar milkshake. A nation state could adopt it just out of protection. But once that happens, that's when it decouples, and that investment becomes something different. It becomes a store of value and something that earns a place in everybody's portfolio. And when that happens, well, then we're going to $1 million.
Yeah.
And that's just like that's just kind of a simple leap, because when it earns that spot in everybody's portfolio, and they say this is the gold it's so easily transferred. It's so easily stored. I can move it quickly. I can move it with me. It doesn't have inflationary aspect. It's that perfection of money that we've been looking for. Okay, that's when it turns into money. And as other currencies collapse and we end up with just the US dollar, just the Russian, Chinese yuan, ruble, whatever it is, because that's based on commodities, well, then we're in a new world, and Bitcoin leaps into yet another phase. And then it goes from 1 million to what, 10 million? And then from there, it just starts, it swallows. And I don't know if it's going to hit 10 million or 100 million in my lifetime, but I do believe that it will hit those numbers at some point. But at that point, I think what Jeff is saying is that you're not going to be thinking about it in terms of $100 million per coin. You're going to be thinking about it as, how many sats do I have in my account? Period.
Yeah. Wow. You guys made me feel so bullish. Now, one last question. And by the way, I agree with the decoupling theory. Is that going to happen in the next 10 years, Jeff? And then last question to James, and then we will wrap it up.
So complete decoupling, yes. I think it's going to happen a little sooner than we think. I also think, by the way, we're going to see it on a little minor scale, not for the reasons James talking about, not because people have figured out that it's just better money. That's years down the road, but I think that's like 2025, 2026 or so, based on just rate of adoption and use cases and things like that. I think we're going to see a bit of decoupling coming up this half of 2022, actually, and that's mainly because Bitcoin sniffs things out so quickly, and it sniffed out trouble under the hood way back in early November. It's going to be, I think, the first to sniff out when things are starting to look good again, when we go from bad to less bad. I also think that almost all of the downside has been already priced into it. So we've been through the worst of it so far. I really think, and I talked a lot with the on-chain analysts, a lot of the famous guys on there. Checkmate was one of them that I was talking in a room with him quite a bit about this. We both think, and he can prove it, and this was my theory, and then he proved it with on-chain analytics, where basically all of the lettuce hands, all of the traders, all of the tourists are gone right now. It's just left to the old guard. It's just left to the three of us and all the other people like us who dollar cost average, who buy it every paycheck, those kind of things. We're the ones who are left, and we're not selling. And so we're kind of at that point now where there's not really that many people left to sell. There's some people still trading around in it, but I think it just goes kind of choppy sideways for a while equities still take another bath. I think equities are going down another 20, 30, 40% possibly, maybe more from here. Personally, and that's how I'm doing it. And just, for full disclosure, like, I'm shorting equities like crazy right now, and I still have been shorting. And I think we're at July 20th right now. We've seen a nice rally for basically the entire month of July. I think this is a typical bear market rally. I am not excited that we're at the start of a new bull market for equities. I do not believe that for a second. I think we have lower to go. So I would use these opportunities to short. When you're seeing liquidity being sucked out of the system, and a dollar shortage everywhere, and the dollar wrecking ball because the Dixie's spiking, you see all this stuff going on. Those are all very clear signs, at least to me, as a fund manager, that you need to be short, and you need to be bearish, and you need to lean bearish. So you don't have to hedge like I do. You can just hedge just by increasing your cash position. But I think it's not a bad strategy right now to be shorting equities and to be buying Bitcoin while it's cheap, and dollar cost averaging into Bitcoin while it's cheap. I think that's a great long-term strategy. Take advantage of short-term weakness, put it into the best long-term asset that's ever been created, and you'll do really well.
Awesome. That's very, very good advice, guys. James, when is this decoupling happening? Last question.
Yeah, I think it will be a short decoupling, like Jeff was saying. Bitcoin has demonstrated it's a leading on the risk on asset for the last I don't know how many months, and that correlation has been pretty strong with the Qs, right? So we've seen how quickly the Qs move after Bitcoin. Bitcoin does sniff it out first, and it does move first. So when the Fed is going to pause and turn, Bitcoin will most likely rip first, but there could be pain between now and then. I mean, I'm still cautionary, and that's why I'm just like not just all in every single time it dips. You've got to layer yourself in. I could see a nice, strong wick down, but then a really strong reversal from that because of exactly what Jeff was saying, is that the risk is priced in. This is we could just touch that 85% down, or we're 80% down from where it was on 69,000. So, we could touch that $14,000 mark on a really hard wick down, but I don't think it stays there. I think at worst, we chop sideways for a while. And then once the Fed, it's very clear that they're going to pause or turn, then Bitcoin's going to move first, because that's the nature of it right now. So it decouples for a little bit, but then the Qs catch up again. And it's going to take a minute for people to understand that this is different, and for investors to really understand it, and for that massive amount of money in the markets, the hundreds of trillions of dollars that just a few people are in control of, for that to be set apart, like we were talking about just a little while ago, as something that earns a place in your portfolio. It's going to take a minute, but for it to decouple for good.
Wow, gentlemen, that was amazing. That was the first interview format for Simply Bitcoin. I'm super, as you can see, I'm still having a little technical, I'm still learning. It's live, guys. I apologize. Guys, I really hope you enjoyed the show. Gentlemen, thank you so much for joining me. Jeff, why don't you tell everybody where they could find you, what you're working on?
Sure. If you want to just hang out, I'm on Twitter all the time. My handle is @VailshireCap. I love talking about Bitcoin, obviously, and finance and investments and stuff. If you want to learn about what I do for a living with Vailshire, I obviously manage accounts quite differently than most financial planners and investment advisors do. So you can just check out vailshire.com. You can even shoot me an email at info@vailshire.com, and I'll get that and I'll respond to you personally.
Awesome. Great. James, why don't you tell everybody what you're working on? I know you have a great newsletter, which I'm subscribed to. Yeah.
Thank you. Well, first, thank you for having me on, Nico. It's always good to see you and Jeff. I'm sad that Foss had to drop off, but we'll get that fixed up and do it again sometime soon. But you can find me on Twitter, just James Lavish on Twitter. I'm also working on. I help out with that platform, the Looking Glass education platform that's in my Twitter bio. And that's a great platform for people to learn about money, the history of money, the uses of it, really understand the workings of it, and why Bitcoin fixes so many of the problems we have in fiat. So that's a great starting place for a lot of people. If you want to help people understand money and Bitcoin, that's a great place to send them. And then my newsletter, I put it out each week, every Sunday morning. It's just I take one complicated concept from finance, and I simplify it for everyday people, for you to understand what is going on in this world, and all of these acronyms we throw around, these terms, and these, the little idioms that we throw around that you may not understand. You hear them all the time, like the milkshake theory, or you hear about CDSs, or you hear about the repo market, but you don't really understand it. So I try to break it down super simple, just a few minutes each Sunday morning, so it gets you just a little bit smarter, and it pulls down the curtain that all the system hides behind, and makes it easier for people to understand what is happening around them and to them, and a little bit smarter in their own finances. So that's kind of the point. Yeah,
and that's exactly. Go ahead, Jeff.
Can I just jump in quick to just say James's newsletter is just fantastic. So if you guys haven't signed up for that, please do. He writes it. You can tell he really knows what he's talking about, because he explains it like he's talking to like a 9th grader, and like anyone can understand it. It's fantastic. It's taking complex financial subjects and making it so anyone can understand. I think you're doing a great service for the world, James. I love it that you do that. So I'm a big fan of what you do in your work.
Oh,
Thank you,
looks
man.
like-
I really appreciate that. I really do.
Looks like Greg popped back in. Hey, Greg.
Hi, Greg.
Greg.
Oh, looks like he can't hear us. Anyways, guys, thank you so much for joining me. Like I said, this was the first Simply Bitcoin interview style. I'm going to put you guys backstage for a little bit. Let me wrap up. Give me 2 minutes. But yeah, guys, that was the first of these long format style conversations. You guys know we have the show. This podcast, this interview was brought to you by Represent Ltd. Awesome company. Buy a Bitcoiner. He makes Simply Bitcoin merch. It's comfortable. It's stylish. I literally wear this all the time around my home. Yeah, guys, thank you so much for joining me. For anyone who's freaking out, don't worry. The other show is still going to stay exactly the same. This is just a